President Trump just unveiled his new tariff plan, and it is much stronger than what was originally anticipated. So you bet it is going to shake up the global economy, and it's probably going to shake up the stock market as well. The White House is calling this new tariff plan, quote, "Make America Wealthy Again." And President Trump has announced these reciprocal tariffs on 60 countries. And the way it's going to work is it is a baseline 10% tariff, but it can go a lot higher depending on how much these foreign countries are charging the United States. Let me read you directly what Trump said, and I'll break it down for you. President Trump said, quote, "We will charge them," these foreign countries, "approximately half of what they are and have been charging us." So what does that mean? Let's go directly to the White House statement. The White House says that China is charging a 67% tariff on goods from the United States. So the United States will place a 34% tariff on Chinese goods. Vietnam has been charging a 90% tariff on goods from the United States. So the United States will charge a 46% tariff on Vietnamese goods. Sri Lanka has been charging an 88% tariff on goods from the United States. So the United States will charge a 44% tariff back onto Sri Lanka. Now, here's the tricky part, and the part that has a little bit of uncertainty. This tariff amount that is being disclosed by the United States is based off of the tariff, but also currency manipulation and trade barriers. What does that exactly mean? Well, there's no clear answer. So based off of what the United States says are the trade barriers and currency manipulation, that's what the United States says is the tariffs that these countries are placing on us. So the United States is responding with very strong tariffs. And this is what President Trump says is going to now unleash, quote, "the golden age of America," which he says is going to bring back more jobs, more manufacturing, and bring in a new age of, quote, "domestic prosperity." Here's what President Trump said directly, quote, "We will supercharge our domestic industrial base. We will open foreign markets and break down foreign trade barriers, and ultimately, more production at home will mean stronger competition and lower prices for consumers." But here's the question. Are we going to see lower prices sooner or later? Because we've had a lot of differing opinions on this, where the Federal Reserve Bank says that these tariffs could bring in a period of, quote, "transitory inflation," essentially meaning if we are now charging these tariffs in foreign countries, the businesses that produce their products in foreign countries are going to have higher costs, which could then mean higher prices for consumers. Because remember, businesses, when they have to pay this additional tariff, can either shrink their profit margins or they can pass that cost down to their consumers, meaning raise their prices. We're going to see what ultimately happens in the coming days and weeks. And this is where Trump says that jobs and factories will come roaring back, and these reciprocal tariffs will be good because they will continue to bring this domestic industrial base back into the United States, which is not something we've had for a long time. And these tariffs are not waiting very long. For example, the United States has already, as of the time of this video being live, imposed a 25% tariff on foreign-made cars. So we will see the impacts very quickly, and we will see if any adjustments are made. Over the last couple of months, every time there's been a new announcement on tariffs, it started a new negotiation, and that will probably happen here as well. Now, I want to break down all of this and what this means, but I want to remind you that we talk about all this in Market Briefs. Market Briefs is my free financial newsletter where every day my team is working to break down what's happening in things like the economy, the stock market, the housing market, crypto, and the global economy into a fun, witty, and easy to read newsletter. So if you'd like to stay up to date on news like this, you have to join Market Briefs. We have hundreds of thousands of investors that read it every morning, and it's completely free. Plus, when you join Market Briefs, you'll also get access to a free investing masterclass. So if you want to join Market Briefs, I have that link for you down in the description below. So I've already explained how tariffs are a tax. It's a tax paid for by generally the business that's importing goods from foreign countries. Now, the reason why I say that there could be negotiation on tariffs is that was the intent with this tariff plan. What I mean by that is when President Trump says that they're going to unleash these half reciprocal tariffs. In other words, China is charging 67% on United States goods, so the United States is going to charge 34% on Chinese goods, is so it incentivizes these foreign countries to lower their tariffs based off of what Trump is doing. So if China now says we're going to lower tariffs on the United States goods, then in theory, the United States would also lower their tariffs on Chinese goods. What's ultimately going to happen? Only time will tell. But we know in the short term is that these tariffs are going to shake up the markets. They're going to create a lot of panic. They're going to create a lot of anxiety. There could be some increase in the prices of things. Even President Trump has talked about that. And so what you want to understand now as an investor is how you can find the opportunity, because chances are we're going to see a lot of volatility in the markets, because this is the biggest tariff unleashment, if that's even a word, that we have seen in really our lifetimes. So all that is going to create uncertainty and volatility, and you want to be able to find the opportunity. But in order to find the opportunity, there's a few things you have to do. Number one, cut through the noise. There's a lot of political emotion. There's a lot of financial emotion out there. I want you to be able to put the noise aside. That way you can look for the opportunity. Number two, you need money to invest. That means you got to get your money right. We're going to see a lot of craziness in the markets in the short term and probably the medium term as well. And that craziness creates opportunities for the financially savvy. The average person is getting either angry or very excited. Wall Street is getting rich. So you pick. Do you want to get emotional? Do you want to get rich? If you want to get rich, you have to have money to invest in the first place. That means you cannot spend all of your money. That's the key. You're working a job, you have a business, you gotta have money to invest, because that's what wealthy people do. They're focused on investing their money. The third thing is, where do you invest your money? And this is going to depend based off of you, your risk tolerance, and your investing strategy. For some of you, in fact, for most people, passive investing is a better way to go. Now listen, I can't tell you what to do because I'm not a financial advisor. Investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But the way passive investing works is you just invest your money into the American economy. And the way you do that is you find an ETF or index fund that gives you broad exposure. So I'll give you a couple hypotheticals. SPY. That is an ETF that gives the exposure to the S&P 500, the 500 largest companies in the stock market. If you buy that one ETF, you are owning a piece of the 500 largest companies in the stock market, and you don't have to worry about keeping up with those companies. An alternative would be VTI. VTI is an ETF that gives you exposure to the total stock market. So if you're investing in one of these types of ETFs, it doesn't matter what's going on with tariffs. It doesn't matter who's in the White House. It doesn't matter if the markets are going up and down. You follow a strategy called ABB. Always be buying. The only time you would change this is when you see a market downturn. That's the time for you to potentially buy more. And the way you win in this always be buying strategy is you set up a system. So every week or every 2 weeks or every month, you just keep buying a little bit more. Every time you get paid, you buy. When markets go down, well, now you can increase your buy to buy a little bit more aggressively, because when the stock market goes on sale, that can create a good buying opportunity. But for some of you, you might want to be a little bit more involved. You understand that it involves more risk, but also more potential return. This is where you want to look for more individualized opportunities. Now, instead of just investing in the markets, or maybe in addition to investing into the economy, you want to look for more niche opportunities. You want to look for what I like to call a market shift. You want to look for where the money is moving before everybody else. This is what Wall Street does. They want to know where's the money moving. So when you hear the news that all these tariffs are coming into the United States, you want to know, okay, if there are tariffs on China and Vietnam and Sri Lanka, where is the money going to move next? Is there going to be more manufacturing in the United States? If so, where is the investment opportunity? Could that be in construction companies that are building the manufacturing plants? Is it the logistics companies that can help transport goods from one manufacturing plant to the other? Is it in commodities like steel that needs to be used in these manufacturing plants? Where is that investment opportunity? You can start to see how it takes more work, it takes more time, it comes with more risk, but also more potential return. There's a lot of policy changes happening in the White House, which creates a lot of movement in the economy. Because as an active investor, you want to know where the economy is shifting, where the money is moving, because that's where the opportunity is. Now, yes, the government can influence where money is moving because the government is the largest spender in the economy, but they're not the only spender. There's a lot of other shifts happening as well. For example, artificial intelligence has created a shift. Now you might say, well, everybody knows about artificial intelligence, Jaspreet. Yeah, but there's a lot of new things that have to do with that as well. Artificial intelligence companies need data centers. Well, those data centers could also be a place that see a shift. Those data centers also need energy. Those companies that are providing energy to the data centers, that could be an opportunity as well. Those data centers need a way to stay cool. That could be another opportunity as well. And so now you're starting to think a little bit like an investor, because now you're looking for where is the money going to be moving over the next 5 or 10 years. And that can create an opportunity, assuming you can find a good shift and then a good company. But here's the risk. You could find a great shift. Let's say you like the idea of investing in an AI data center. But the first risk is AI goes away and those data centers go bankrupt. So the shift that you thought was there was wrong, you lose. The other risk is you invest in an AI data center company, the shift happens, you start to see a big investment in AI data centers over the next 5 years, but the company you invested in went bankrupt because they mishandled their cash. That was a risk with the company that you invested in. So not only do you have to be able to identify the shift, you have to be able to research the company. This is one of the things that I talk about in the masterclass. If you sign up for Market Briefs, you'll hear more about it. But the whole idea here is you're more involved. It's not for everybody. It takes more time, it takes more work, it takes more research. But if that's something you're interested in, when you see the craziness in the news, you want to ask the question, where is the money moving? That's what Wall Street does. But you can't even get to that question if you get so caught up in the emotion, you get so caught up in the panic, you get so caught up in the excitement. I want you to stay calm, cut through the noise, cut through all the political headlines, because guess what? Media companies are in the business of selling emotion. I know this because I own a media company. Briefs Media is in the financial media industry. Now it's a little bit different because our news is in one newsletter, so we don't need all the same sensationalism. We can be unbiased. But for traditional media companies, if they can get you excited or scared, they can get you to click, and that's how they get paid. And that's not a good thing when you are an investor, and that panic can get you to change where you put your money. So if you are actually investing your money, you have to learn to stay calm, cut through the noise, and find the opportunity, because a lot of things are going to be changing with tariffs. And a lot of tariffs are going to be changing over the next few days. I don't know how it's going to play out, but I'll be keeping you posted here, and we'll also be keeping you posted on Market Briefs. And with that, I will see you on YouTube tomorrow.